Would you like to know exactly what to put on a credit card application when you're going for business credit funding or personal credit funding? Now, here's the thing about it. There's actually two things that are top priority that most people end up getting denied for, and we're going to talk about that. Now, here's the thing about it. When going for business credit funding and personal credit funding, the top two things that will get you denied, number one, is the name. That's right. If you don't have the accurate name on the credit application as on your personal credit report, this can get you denied. Even on your business credit report, this here can get you denied. And most people are not aware of that. So it may not be anything wrong with your personal credit or your business credit file. It's just because the names are not matching up. So that's the reason, like, if you trying to go for personal credit funding, you want to go to credit bureaus like LexisNexis, okay? And you want to make sure that that information is matching up. Now, here's the thing about it. Like, some people will go to LexisNexis and they may opt out, right? And they may lock their file, but ends up happening is, like, with some of these lenders and stuff like that, they may check this, and if they can't get access to that file, they'll deny you for that. So that's something that you have to keep in mind as well. Now, also, in terms of with the personal credit, there are other credit bureaus. Like, some lenders may use a SageStream, right? And SageStream is associated with LexisNexis. Or they may use ARS. Now, ARS is like with US Bank, all right? So that's the reason, like, you have to be very careful. Now, your third party financial, like when you have a bad credit, when you have real bad credit, okay? I can't think of the word right now, but when you have real bad credit, now the thing is that, like, they won't pull from the major credit bureaus. They're going to pull from, like, Clarity, right? Which is owned by Experian. Or they may pull Data X, which is owned by Equifax. Or they may pull Factor Trust, okay? Now, with Factor Trust, they're owned by TransUnion, all right? So this is what I tell people, that you have to make sure, just on the name alone, is that if that name is not matching up in the systems, then you can get denied. Now, here's another thing that can get you denied. Number two is address. Now, the address is even more important than the name. And a lot of people are not aware of this. So when you are filling out an application and stuff, that's the reason I tell you to make sure, if you're looking for funding, you always want to pull your real credit report, okay? Because you can go to, like, Credit Karma, right? And they'll give you your Vantage score and stuff in reference to the name and stuff, but you need a place where you actually pulling real data from. So if you need help with that, click the link in the description, get your real credit report. Now, that being said, like I said, with the address, now, if that address on the application is not matching the address on your credit file, again, that in itself can get you denied. So it doesn't matter what your credit score is, doesn't matter how many accounts, how old the credit file. If that address is not matching up, then you can actually get an automatic denial. All right. So, and I just told you some of the ways to fix that as well. And we also help with clean some of that stuff up also. Now, number three, when you filling out your application on your credit report, one of the things about it, you should not have this word on here. You should not have this word on here, retired. Now, the reason why is because when you have retired on your application, it looks like you have limited income. All right? So it shows that you have limited income. So you don't want to look like that. Even if you're retired, you have a 401k, you may have a pension plan or something like that, you still should consider, even if you're structuring your own business, and we also help with that. If you find a value in it, please subscribe to the channel. I really appreciate it. Hit that bell so you can get the notification and make people aware of the channel. It really helps. I really appreciate it. But going back to this, when you have retired on the credit file, again, it shows that you have limited income. So the way to get around that, especially when you're trying to get funding and stuff, you're going to need to set up a new entity, and you are an employee of that entity. Okay, so that way it looks like you're not just retired. Now, I'm not telling you to take advantage of the system. I'm just saying, when you're trying to get funding and stuff, when you have this word on there, it actually hurts you. That word, SSI, all right, disability, these are things that can hurt you, okay, when it comes to funding and stuff, because it looks like limited income. So that's the reason you do not want to have that showing on your credit file, nor do you want to actually put that on your application. Now, I'll tell you something that will help it in a minute, and this here, number 4, is self-employed. Going into that, right? So if you have self-employed, okay, when you put self-employed on your credit file or something like that, what it is, it's telling them that you have unstable income. Unstable income, right? So you do not want to show them or appear like you have unstable income. Now, again, you may have a spouse in the household that has income that's contributing, or you may be renting out a room. You know, you may be on disability or something like that, but you're renting out a room, so you have income and stuff like that. So you should also put that on the application, especially if it's contributing toward your income, right? So that's the reason you should have that on there. Another thing that can get you denied is your business name, all right? Especially like if you use a name that has a trademark in it, all right? So if you use a name for your business that has a trademark in it and stuff, many institutions will not utilize that. All right, so that's another thing. Let me go back to this address also. What's happening now? Say that you, with the address, all right, is like a virtual office, right? So you have a virtual office, right? But here's the thing about it. A lot of financial institutions now, because the virtual office address has been recycled so many times, now they're more likely going to make it more challenging for you to use a virtual office. You'll have to actually use a physical office. That's the reason I tell people use their home address, because using your home address will not stop you from getting business credit funding. Now, you can use your home address to register your business, open up your bank account stuff, and then use like a mailbox or something like that for forwarding. Because I know a lot of people worry about privacy and things of that nature. That's how you want to get around that. But you do not want to use a virtual office, because that virtual office address may have been utilized by some other guy or girl, whoever it is, or some other company to make it proper. That company may have gotten credit, say with Chase, right? And they use that address. So then they did not properly dissolve the company. They did not properly dissolve the debt or satisfy the debt or whatever. So then you come along, you use that same address and you go to Chase. So now Chase is looking at you like, no, we're not going to give it to you. Now, trust me, that probably is a good thing. And the reason is because of this. If that company had outstanding debt, okay, and they did not resolve that debt, and they use that address, and you turn around and use that address, now it can be a challenge for you, because it can show up as phantom debt on your business credit file, even though you had nothing to do with it. So it does happen, all right? So you have to be very careful of that, very mindful of that, because it's very important. Now, in terms of what else that you need to understand, especially when it comes to business funding, is the NAICS code, all right? Now, this here, choosing the wrong NAICS code, and you hear me talk about it. As a matter of fact, we do have a new system that's going to be coming out that we're launching. I'll let you guys know about it. But with this here NAICS code, choosing a high-risk NAICS code, which you may not be aware, right? You may be an individual, you just want to start a business. You don't know nothing about an NAICS code or understanding that or whatever, and you're just trying to get funding, and then you go to the bank, and the bank like, we can't open up the bank account. So now you scratch your head like, why? And they say, well, you got a high risk NAICS code. But you as a newbie, you're like, I never heard of that. I don't understand it. So then many a times they won't break it down. But like we always talk about like restaurants, real estate investment, okay, credit repair, just to name a few high risk type of businesses and stuff like that. Now, if you have more questions about that, you can click the link and schedule one-on-one consultation, and I can dive deep into this. I'm not going to take up as much of your time, but because I want you to just understand the basis of what you should have on the application. All right. Now, here's something that's very important. Your purpose for money. All right. What do you need the money for? All right. When they ask this here question, and I always tell people, look, if you're going to a local institution and sitting down with the banker and he's helping you fill out the application and he's asking you, hey, what do you need the money for? Well, there's 4 things that you should tell them that you may need the money for. One is marketing. All right. So marketing, excuse me for the squeaking. I know some of you guys may be irritating, but excuse me. But marketing is one of the ones that you can help get capital for. So if you're going to do marketing, then you may have expansion. So you have expansion. That's another one. You may want to buy another office building or something like that, right? Then you may need inventory, right? You may need inventory. So the inventory you may need. So this is the type of thing. Or the last one is working capital. So you have 4 categories that you should let them know why you need the money, right? This is very important because the more straightforward you are in terms of letting them know, hey, this is why I need the money or whatever, the easier it is for them to push through. And I'll tell you something else. The reason why you want to go into a financial institution, sit down with the banker, because the data that's coming from their computer is going straight to the underwriter, right? And because they have quotas to fill, if they don't fill those quotas of helping people get approved and stuff, they can lose their job. Right? So that's the reason you want to be on that end of the spectrum. Besides, they may give you $5,000 starting out, right? But the thing about it, because it's coming from their computer, they're able to pick up the phone call, right, and try to negotiate you getting more money. So this is the reason why I tell people, hey, go inside and talk to somebody, all right? Now, let's talk about this again. We were talking about household income, right? This is very important because the thing about it, if you have not enough income, then this also can get you disqualified. And what I mean by that, not enough income, because your expenses are more than your income, so that pushes your DTI up, right? Your debt to income ratio. Now, with most of your major banks and stuff like that, your tier 1 banks and credit unions, tier 1, tier 2, and tier 3 credit unions and banks as well. If you have, say, 50, maximum 55%, they may not be willing to give you funding, all right? Because they may say, hey, your DTI is too high. Now, here's the thing about it. Like, on the personal side, say, PenFed will work with you if you have 60. Then you have your tier 4 lenders and stuff like Upgrade, Upstart, those type of lenders and stuff like that. They may work with you at 70, 75%, but they don't offer like business funding, right? So that's the reason why your DTI, your debt to income ratio, is very important. So the income that you put on the application really does matter. All right. So that's the thing about it. I continue to tell people is making sure that you have enough income on the credit file. All right. On that application. All right. Now, here's another one. Check business file. Again, we talked about it. You making sure that that name and that information is matching up, right? And so here's the thing about it. because of the misinformation is why you need to really check that file to make sure it's right. But at the same time, it's so important. I'm gonna give you a couple of lenders that where credit doesn't matter. Okay, it doesn't matter, but at the same time, if you have some revenue where credit doesn't matter, it also reflects back if you have revenue, right? So some of the lenders, say like with Fundo, right? So you hear me talk about Fundo a lot. So with Fundo is a merchant cash advance, and they give you up to 10,000, right? So that's with Fundo. Now there's 3 criterias that I always tell you about Fundo: 90 days, right? $1,500 income, right? And then they also gonna pull from, they're gonna use plan or decision logic to make sure that you have revenue coming into the business, all right? Now, unfortunately, they do not operate in California as well as New York. Then you have Giggle Finance, right? Now, with Giggle Finance, they only give you 5,000, but it's the same 90 days. Now, they may work with you if you only have $1,200, but it's 90 days. Now, this is for the gig economy, for people that are trying to get loans. This isn't the personal side. We're going to talk about that in a minute. Now, you also have Lendeska, all right? So with Lendeska, they give you up to 20,000. Now, here's the thing about it with Lendeska. You have to be in 90 days, but they want you to show that 25K annually, so yearly, right? So that's about $1,250 a month, right? But they want you to be in the business at least 90 days. So it just fluctuates. Now, if you have 90 days and you're receiving income, but you're not at the 25,000, so you may get a lesser amount. But they are a platform to help people get funding also. So just keep that in mind. Then, if you have a car, paid off car, you have Vendo, right? So with Vendo, they give you up to 10,000. Now, you have to have a paid off car with equity in it, or you can be making payments on the car. So if you're making payments on the car, but it still has equity in it, they're still willing to work with you. All right. So you have some business lenders here that will work with you just to give you funding without looking at the personal credit. So where the personal credit doesn't matter. All right. So if you guys have any question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.